Hi, good morning, everyone, and welcome to the first public hearing of the Joint Select Committee on Finance and Legal Affairs pursuant to the committee's inquiry into the supervisory and prudential oversight of credit unions in Trinidad and Tobago. My name is Marlene Atts, Senator Marlene Atts. I'm an independent senator, and I'm the chair of this committee. And I wish to begin by welcoming, and I'm going to ask our stakeholders to introduce themselves shortly, but I also wish to welcome those persons who are joining us online on the various platforms, whether it's on the YouTube channel ParlView or via Facebook, the Parliament's Facebook or X, formerly Twitter accounts. So I wish to say good morning and welcome to those, my fellow citizens who are joining us online. And I wish to begin by putting some context, the justification for this particular inquiry. The rationale for the inquiry stems from the evolving role of credit unions in Trinidad and Tobago's financial system and some historical shortcomings in supervision and governance that we think are worthy of some consideration. In any country, the strength and stability of the financial system are central to economic resilience and public confidence. And this is especially true in small economies such as ours, where external shocks, revenue volatility, and global financial conditions can impact on domestic circumstances. So the soundness of our financial institutions is not a peripheral issue, but a core element of our economic stability. In our national financial landscape, our credit unions continue to occupy an especially important position. They serve a significant proportion of the population, they play a key role in financial inclusion, and they provide critical financial services to households and small enterprises. For many of our citizens, the credit union represents their primary engagement with the formal financial system. And it is precisely because of this importance that the sector deserves careful and structured examination. Our inquiry today is not premised on any presumption of failure, nor does it seek to diminish the cooperative model. And that model has contributed meaningfully to economic and social development for many persons over many decades. Our inquiry reflects an acknowledgement that while the scale, complexity, and systemic relevance of this sector have evolved significantly, the legislative framework governing the sector dates back to 1971. So the legislative framework has not evolved at the same pace of the sector. So it is our view, the view of this committee, that a comprehensive inquiry is justified to assess whether the current supervisory and prudential arrangements are adequate to protect members' interests, members of those cooperative societies, to protect their interests, whether the current legislative, supervisory, and prudential arrangements ensure accountability and maintain financial stability and uphold the cooperative's values at the heart of the sector. As I mentioned, the public viewing or listening, they are invited to submit their comments, and I repeat, via the Parliament's social media platforms, either YouTube channel ParlView or via Facebook and X, formerly Twitter. The public is also invited to follow us on Instagram, follow the Parliament on Instagram and Facebook at TTParl Committees, ampersand at the @ sign, at TTParl Committees for real-time updates and highlights from committee meetings. At this point, I wish to invite the representatives from the Ministry of Labour and Small and Micro Enterprise Development and the Central Bank of Trinidad and Tobago to introduce themselves and their team members. So may I invite Ms. Natalie Willis, the Permanent Secretary in the Ministry of Labour and Small and Micro Enterprise Development, to introduce herself and her team.
Good morning, Chair, members of the committee. I am Natalie Willis, Permanent Secretary in the Ministry of Labour, Small and Micro Enterprise Development. I will ask my members to introduce themselves individually, starting with my commissioner on the left.
Good morning, Chair and members of the committee, as well as persons online. I am Charmaine McMillan, Acting Commissioner for Cooperative Development under the Ministry of Labour, Small and Micro Enterprise Development.
Good morning, Chair, members of the committee, and members of the public viewing online. My name is David Moore. I'm the Cooperative Development Specialist in the Cooperative Development Division, Ministry of Labour, Small and Micro Enterprise Development.
Good morning, Chair and members of the committee. I am Amanda Wallace, Legal Officer, Cooperative Development Division, Ministry of Labour and Small and Micro Enterprise Development.
Central Bank team to introduce themselves.
Good morning, Madam Chair and members of the committee. I am Michelle Francis-Pantor. I'm the Acting Inspector of Financial Institutions at the Central Bank of Trinidad and Tobago. And similarly, I will ask my team members to introduce themselves.
Good morning, Chair, members of the committee, and all the viewing public. I am Nairi Brathwaite, Assistant Manager, Banks and Non-Banks Unit of the Financial Institution Supervision Department at the Central Bank of Trinidad and Tobago.
Good morning, Madam Chair, members of the committee. I am Patricia Babwa, Legal and Contract Specialist at the Central Bank of Trinidad and Tobago.
Thank you very much. May I invite the members of the committee to introduce themselves? May I start with Minister Marat?
Rishad Citral.
Davish Maraj.
Sean Sobers, member.
Vishnu Danpur. Brian Manning.
Thank you so much. Before I move on to share the specific objectives of this inquiry, two housekeeping reminders. Please ensure that your phones are on silent. And when you're making a contribution, please, since it is being transmitted far and wide, if I can ask you to use your microphone just to ensure that we get the clarity of whatever your contribution is at the particular point in time. So if I may start by sharing what are the specific objectives of this inquiry, again for the benefit of our viewing audience. We have four objectives, the first of which is to assess the adequacy, effectiveness, and enforcement of existing supervisory, regulatory, and governance arrangements for credit unions and cooperative societies in Trinidad and Tobago, with specific emphasis on the roles, responsibilities, and powers of the relevant oversight bodies under the current legislation. The second objective is to examine governance practices within credit unions and cooperative societies, including board accountability, management oversight, member rights, transparency, and compliance, and to do so to identify any structural weaknesses and risks to members and the broader financial system. The third objective is to evaluate whether the current legislative and regulatory frameworks are fit for purpose, having regard to the scale, complexity, and systemic importance of the sector, and informed by lessons arising from past institutional failures. And the final objective is to examine the legal, institutional, financial, and cultural challenges associated with strengthening oversight and governance within the sector. It is against that backdrop that I wish to invite Ms. Natalie Willis, the Permanent Secretary in the Ministry of Labour, Small and Micro Enterprise Development, to make some brief opening remarks.
Thank you, Chair. We at the Ministry of Labour, Small and Micro Enterprise Development are grateful for the opportunity to meet with the Joint Select Committee on Finance and Legal Affairs for this inquiry into supervisory and prudential oversight of credit unions in Trinidad and Tobago. The Ministry's core functions focus on, among other things, the sustainable development of the cooperative sector. And why, you may ask? The corporate sector in Trinidad and Tobago possesses assets of over TT 20 billion with a membership of over 700,000 citizens. However, it is recognized that a number of issues in the wider governance framework need to be addressed. For instance, the legislative framework governing cooperatives and credit union must be modernized to reflect international best practices, enhance regulatory oversight, and provide a more enabling environment. The Ministry, therefore, is committed to improving governance of the sector to maintain financial integrity and the confidence of the national community towards the strength and vitality of the sector. I look forward to fruitful discussions and suggestions as we avail ourselves of the deliberations of this committee. Thank you.
Thank you very much, PS. Mrs. Francis-Pantor, may I ask you to make your opening statement?
Thank you very much for inviting the Central Bank to participate in this important inquiry into the supervisory and prudential oversight of credit unions in this country. The Bank is of the view that strengthening the regulatory framework governing credit unions will not only redound to the benefit of the credit union sector and its members, but to the financial system as a whole. In this regard, the Central Bank was represented on the Cabinet-appointed Committee for Strengthening the Regulation of Credit Unions, and we stand ready to continue to support initiatives aimed at enhancing supervision and prudential regulation of the sector. Thank you.
Thank you very much. And the members will at various points wish to raise particular issues either with colleagues from the Central Bank of Trinidad and Tobago or from the Ministry of Labour, and I will use the abridged version, Ministry of Labour, rather than call out the entire name, so I apologize for that from now. It could be a bit tongue-twisting if you try to call out all of that repeatedly. So from time to time, members of the committee will pose questions, but I wish to start the ball rolling by posing a question to the Ministry of Labour in terms of, and these questions would have been culled from the submission that the Ministry would have sent to the Parliamentary Secretariat. So in terms of oversight, supervision and enforcement, in the submission from the Ministry of Labour, it is stated that the Commission relies on powers under the Cooperative Societies Act, Chapter 8103, and you rely on those powers to access records and to monitor compliance. And based on that response, I wish to ask, at present, how often inspections and records examinations of credit unions conducted? How was the frequency? And to what extent are societies generally compliant with the requests or the directives coming from the Commissioner's office? And you can feel free in responding to clarify for my own edification, but also for the viewing public, whether you can in fact give directives or whether it is simply requests. So it's really a two-part question, so I would wish to invite the Ministry of Labour to provide some clarity from that perspective.
Thank you, Chair, for that question. I will pass it over to the Commissioner for Cooperative Development.
Good morning again. The Cooperative Development Division, over the years, we have carried out, let me see, about 18 inspections and so on, inquiries, and coming out of that, we review the reports accordingly, and we advise the societies whereby we give them a time frame where they could rectify those particular situations. Where we do get challenges in terms of persons writing responses, legal letters and so on, we have our legal team review those questions and areas for consideration and we respond to them. But we try to, of course, we have to stay within the framework of the Cooperative Societies Act and ensure they
just to confirm, the Act of 1971?
Yes,
okay.
Cooperative Societies Act, Chapter 8103. Try to stay within the framework of the Act and, of course, well, regulations and other policies that we develop accordingly. So we have been doing work rigorously despite the issue of having limited staff. We've been trying to see how best we could rectify those situations with credit unions and to ensure soundness and so on.
Thank you for that response. And yes, we did note in the submission the challenge of the resource constraints that you face at the ministry, and I think one of my colleagues will pose a question on that. But I just wanted to follow up in terms of your response to the inspections, etc. In your submission, you also indicated that cooperative officers attend and monitor board meetings. So I wanted to ask a couple of things on that. How many meetings, credit union and cooperative society board meetings, did officers from your division attend in 2025? And in instances where officers observe board decisions that may breach bylaws or governance standards, what, if any, kind of intervention might have been pursued?
After the observations or how should I say, the findings are made, the officers would advise the board immediately on spot, of course making reference to the particular section of the Act. And of course, if not, they don't comply, we write them accordingly. Of course, when the reports come into us and our specialist team reviews them. So in that way, to ensure compliance and so on, we would write accordingly. And if not, of course, advise them of the breaches and so on. But in terms of the penalties and so on, the penalties are so minimal. Sometimes we do have that challenge of boards not adhering to our recommendations, but we write them and of course we advise them accordingly of what areas they're going wrong.
Okay, and I appreciate the constraints posed by the legislative framework within which you operate, the resource constraints, etc., etc. And I know there is sometimes a lag, so you might have an observation. You may use the soft approach where you engage them verbally and then you follow it up in writing. But to my mind, when I'm hearing that, that is kind of, the only word coming to my mind is lags. And I appreciate the constraints that you face, but all of what you're saying is translating to me as lags. So recognizing that there will be lags, my concern that flows from that is whether or not some of these things that you've written them on or that you've raised for their attention are significant compliance issues. And if they are, in fact, significant compliance issues or other kinds of oversight issues that you think could compromise the operations of the particular credit union or whatever it is, what happens next? Is it that we hope that it doesn't, the lack of compliance or the lag to ensure compliance, is it that we hope that doesn't result in something catastrophic that could impact on members' welfare? Because at the end of the day, I presume whatever that you've highlighted to them is in the interest of the members. That is what we're all about. PS in her opening comments spoke about sustainable development. Once you say that, you tickle me. That's my kind of language. So what happens then when there is that, when there are those lags? What happens to the members? Because if you raise an issue with them, it is not something, you will not raise a light issue. It is something that is significant.
Okay, what we have done through the years, we write, we wait for a response, and of course in every situation there's natural justice. You give them the opportunity to rectify 60 days, 90 days or so to rectify whatever the particular breach may be. But how should I say it? Sometimes the responses and so on are, I don't want to say it circumvents what we do, but we are challenged tremendously in that area. And hence the reason, one of the areas that we were looking at was the installation of an inspection team that could go in and thing. Now, we have never really written a code, even though it is stipulated in the Act that there could be fines for breaches of the Act, their bylaws and so on. But those charges and so on, which is about $2,000 and so on, is minuscule in terms of, in terms of, I don't want to say crime, but the shortfalls in terms of operations or going against what the written policies or bylaws are, and of course the Act. So I want to ask my cooperative specialist if he could interject and give me some more information in that particular area. Mr. David Moore.
Thank you.
Thank you, Commissioner. Through the chair, in terms of our attendance at board meetings, we do attend board meetings frequently. That is one area that we tend to ensure that we do cover despite the staff shortages. Most of the issues that would be raised would be rectified on spot or within a matter of a few days or so. But the contentious ones, where there is not compliance and where we believe that it is of sufficient import, we would seek to take legal action. And we have legal officers on staff and also through the ministry. That has met with some success in some areas. We've been successful in obtaining injunctions from the court to prevent certain actions. However, there are some matters that became intractable and continue to lag on, so that we definitely need more assistance in terms of the enforcement regime. And of course, if the legislation is tighter, it would greatly assist.
Right. Could you, without specifying, because this is not a forum for that, but could you give us a sense of, you use the word contentious, and I'm a language person kind of thing. So when you use words like that, could you give us a sense of what could be an example of a contentious issue?
Well, we've had instances where the board took upon itself powers that it did not have in the Act. And we had to, for instance, in terms of suspension of other board members, and they did not follow the proper procedure, and of course this would have implications for the proper constitution of the board, and it could have further implications in terms of the governance of the society down the road. So we've taken action in terms of those. We've also had a situation where the AGM was not properly constituted, and again that would have implications for the validity of decisions taken. And because the Commissioner has the responsibility for interpretation of the bylaws, once the Commissioner gives instructions, they're supposed to be followed, and of course if they did not follow, it's a breach of the Act. However, we have societies contesting and producing another legal responses and taking the matter through the court. So those are some of the main areas.
Okay, I appreciate. Thank you very much for that clarification, Mr. Moore. And again, one of the things that came out from the Commissioner's submission and also your further elaboration of the issues is the issue of the narrowness of the legislation as it currently obtains in terms of giving you the authority or the legal framework within which you can discharge your duties given what has happened, the evolution, as it were, in terms of some of the credit unions. I know that one of my colleagues, Member Devish Maraj, had a question on legislation, so I don't know if he wants to come in now to pose that question. So you have a follow-on question, Member Manning? Okay, sorry, Member Maraj, if you can ask Member Manning to pose his follow-on question.
Hi, good morning. Question: how often is it that a credit union would face fines or reprimand after such an investigation? Is this a regular occurrence, or would you say it's once in a while? How regular would it be? Mr. Moore.
Well, some of the issues here are legal issues, so I'll probably defer to the legal officer. But we have not instituted that remedy under the Act. It has been more practical to seek injunctive relief to prevent the action. In cases where there are breaches that are serious enough, we would seek to go directly to the court. Part of the problem is the structure of the legislation, and all of the remedies are in the criminal court, and that poses some challenges. We need administrative fines, and that is not contemplated in the Act.
you, Madam Chairman. This is directed to the central bank. You provided us with some answers in response to the queries. The first question I noted was that there was a mandate in a 2005 cabinet note assigning responsibility for the regulation of the financial activities of the credit unions to the central bank. Later down, I saw that a credit union bill was laid in 2014, which would give us a lapse of some 9 years. I was wondering what took place in those 9 years, considering there was a collapse of a credit union in the intervening period.
All right. So yes, the cabinet note did intend for the central bank to regulate the financial activities of the credit unions. And a lot of work was done by the bank in terms of planning to take on the credit union supervision, including development of a policy proposal document for a legislative framework and development of that legislation, which was laid in Parliament, right? The bill lapsed, and I think subsequently there was elections, and it was determined that there was going to be a different way forward with respect to the regulation of the credit unions, and the central bank would not have been the regulator for the credit unions.
Are you aware of what that different way forward was, considering you were involved up to 2014 in the creation of the bill?
So subsequent to that, there was further consultation with the sector. There was some work done by the IMF in producing a report for the sector, and the way forward that was determined by the authorities at the time was to have an independent regulator for the sector because the sector did not want to split the regulation. So there was a need for one regulator, and there was going to be an independent regulator to be established for the entire credit union sector. There was work done in terms of committees were established. The central bank was represented on those committees to give its input into what the regulation should look like and development of the regulatory framework. Our role was then to be in terms of lending support to building institutional capacity for the regulation of credit unions.
We are now in 2025. Can you give me any information as to whether that independent regulator was created?
Well, I guess that will be for the independent authorities. As far as I know, the committee made recommendations to the...
I said far as you're aware, right?
Yeah.
Do you know if that independent...
No, the independent regulator has not been set up.
So 2005 Cabinet Note, 2014 the bill, 2025 we are still waiting on 2026, and we are now still waiting on that independent regulator. Is that correct?
Yes, sir.
Thank you. You have had sight of the World Bank recommendations in the Financial Sector Assessment Program 2020, Update Report on Credit Unions?
What's the name of that? Yes, that's the one we submitted.
Yeah, that was one of the central bank submissions, yes. The FSAP report.
There is a statement in that document, right, which recommended that the primary responsibility for the oversight of the credit union should be assigned to the Minister of Finance, and that central bank involvement to develop a specific legal framework for the regulation and supervision of credit unions, including the establishment of a new credit union supervisory authority within the short term, within 1 year. What are your views on that recommendation?
Can you point me to the recommendation? What page, sir?
That page should be...
That's on page, it's on page 1. It's the first, it's the central bank's submission. The central bank submission, where you speak of the FSAP report. Sorry, it's on your submission. I think page 3 provides some of the context from your report. So if you look at under number 3, paragraph 3, that says, inter alia, this position was also expressed in a 2017 IMF CARTAC report that talks about the options and recommendations, etc. And I think later on in your submission, there is also a specific reference to the FSAP report.
Are you aware of that recommendation, though?
We are aware of the recommendation, yes.
Yeah, but what is your view on that recommendation? Since it came from an outside authority, I'm just inquiring what is your view, because it seems a lot of consultation has been going on since 2005.
Right.
We have had 21 years of consultation so far. So what is your view on this?
Well, the central bank is directed in terms of the views of the government, right? So a lot of work was done. So when it was initially determined that the central bank should be responsible for the financial activities of the credit union, we stood prepared to take on that work. When the view changed that the central bank will not be the regulator for the sector, and that we stood ready to support whatever initiatives were put in place in terms of regulation of the sector. But we do take our direction from the government and in terms of how the government sees the way forward with respect to regulation of the sector. So we noted the recommendations, and if the decision is to have an independent authority, we stand ready to support the independent authority. We have signed a MOU with the Commissioner of Cooperative Development for institutional strengthening. So we stand ready to support and provide that expertise in the areas where we can lend that expertise on on-site supervision, on what effective regulation should look like. So we stand ready for that. But we will take our lead from what the government of the day wishes to have in place.
I understand that, but you obviously would have a point of view, because you are the regulator of financial institutions, so the government would look to you from time to time to assist in developing their policy. That is why I asked you what was your viewpoint on it.
My viewpoint is that at this point in time, if it's central bank, we stand ready. If it's independent regulator, we stand ready. But the main issue is that the legislative framework for the sector needs strengthening. There are a lot of gaps in the regulatory framework, and we do need to strengthen that for effective regulator, whether it is the central bank or whether it is an independent regulator or whether it is the Commissioner of Cooperative Development.
And can you tell me in your assessment, after all of these discussions and so on, whether Trinidad and Tobago is any closer to establishing an updated, fit-for-purpose legal framework for the effective regulation and supervision of the credit union sector?
At this point in time, no. We have, the closest we are is that...
That's good. That's good. We are now closer to developing. And this is a fairly large part of our financial sector. And after all this time, we are no yet closer. Thank you very much, Ms. Pantor.
Certainly, yes, certainly.
Thank you, Chair. Just a follow-up question to the Minister, and a very straightforward question, Ms. Francis-Pantor. Do you think the central bank should regulate the credit union sector?
The central bank can be an effective regulator for the credit union sector, but similar to Commissioner of Cooperative Development, and we will need to build capacity in terms of resources. But in terms of our systems and processes that are in place, it will lend itself to the supervision of the credit union sector.
So that's a yes or no?
Some things are not readily a yes or no, but it's not.
Okay.
Perish the thought. one of the members, the deputy chair, was just commending you on your response, your diplomatic response. But on a serious note, I am getting the sense, and pursuant to Minister Devish Maharaj's questions posed to you, I am getting the sense that there is consensus, there is agreement that the legislative framework that currently exists really requires some updating, because the sector has grown significantly, and I forgot my notes, but it's plenty money. It's $18 billion, more than 700,000 members, I think, PS Willis, and that is not something that we should take lightly. And in any other circumstance in the financial services sector, a 55-year-old legislation would probably not be considered to be appropriate for any number of reasons. It's not because 55 is not a good number, but it's because that things have morphed over time, not morphed really, but evolved over time, and we should keep in line. And I think the FSAP report pointed to that other jurisdictions in the region have in fact evolved their legislation to cater for the dynamics of the circumstances under which we find ourselves now. Senator, yes, Minister Sobers, yes.
Thank you, Madam Chair. Madam Chair, through you to the Ms. Charmaine Macmillan, in your original set of questions, you asked, at present, how often are inspections and records examinations of credit unions conducted? Ms. Macmillan responded, essentially, 18 inspections. That is over a period of how long?
In the last 5 to 6 years, we carried out inquiries and so on, as the need requires. Now, we just don't go in and say we're here to do an inspection. It would, of course, come out of the reports and so on generated by the officers and their visits, what they have observed, and as well as the review of the accounts, the annual returns, investments, and so on. So we go in where need be. And of course, we also take into consideration there may be persons who come forward and say, bring in complaints, this is going on, that is going on. They're not paying attention to the regulations, the act, and so on. So we would now step in with just an, inspection.
So essentially, it's a coupling of
yes, a combination of
a review
things.
of the records that you procure, and
Yes.
then if there's a possible complaint from a whistleblower or something of the sort.
I wouldn't say a whistleblower, but a member who may be concerned.
And also in terms of the second question posed, in terms of the board meeting monitoring, how many meetings were monitored in 2025? I think that was one of the questions, but we didn't get a response on that.
I would think just over about 60. Now, you have to take into consideration what we advise, or the benchmark that we put for our officers, is that they attend at least one board meeting every quarter, or any committee meetings every quarter, because of their workload. So any officer at any time may have an average of 12 to 15 societies assigned to them. So when you think about the work-life balance, in terms of scheduling your meetings and being present and so on, and then a number of other aspects, as well as training and whatnot, that we would assist with, policy development and so. So I would say it would have been about an average of about 60 credit unions. I don't know if Mr. Moore might have a more specific figure, but remember, apart from the St. George area, we have offices in every county, St. Patrick's, St. Andrews, and so, as well as Tobago. So it's a combined number of societies, credit unions, that is, 126 to be exact. So it's a question of we haven't received all the reports yet for 2025, but it would be an average of about 60 board meetings alone. Keeping in mind, apart from credit unions, officers are also assigned to junior cooperatives, agricultural, and other types of cooperatives as well. Right?
Yeah, I wanted to, thanks for that. I wanted to thank you for that clarity because, again, for the purposes of public education, for those persons who might be viewing online, our focus now is really looking at those involved in the financial services as opposed to the other cooperatives that may be involved, as you correctly stated, Commissioner, in other sectors such as agriculture, etc. So our focus on our remit is specific to those involved in the financial services sector. And I know that Member Kama Maraj had a question he wanted to pose.
Yeah. First, one observation. In a population of 1.4 million people, how on earth do we have 700,000 members in the credit union? That seems highly improbable to me. That's one question. I don't know if you can answer that one. But you also indicated, Commissioner, that the penalties for infractions are minimal. Could you explain, give an example of what is it financial penalties? Yes. And what were these penalties? When were they established? It was established in 1971. In 2026, yes. You can't have the same penalties.
Well, yes, of course. As you said, 1971, there have been a limited number of amendments. But in those areas in particular where the fines and penalties are concerned, those figures did not. Maybe at that time, during 1971 or the early 80s, the $2,000 may have been a major consideration for a number of those financial institutions, but they look at, well, I don't want to say pocket change, but, if I get a fine, I get a fine, and $2,000 comes like $100 or $20 to a number of these larger financial institutions.
Well,
So,
that's the genesis of the problem.
Particularly,
but
if I can add to the line of questioning from Minister Kama Maraj, in the opening statement, we spoke about assets of $20 billion. So if we have that quantum of assets, I wouldn't even bother to sneeze at a $2,000 fine. It's not even worth sneezing at. So again, making the case that perhaps we need to revisit so that it is fit for purpose. One of the the term that we keep using is fit for purpose. If we're in 2026 and you're presenting to this committee that this sector is $20 billion, in assets, that is certainly something that we need to look at. But I know Minister Maraj had another part to his question which he had posed to you.
No.
In terms of
Yeah.
okay.
700,000 members in a population of.
Okay,
That-
we try to monitor those statistics, like when the audited accounts and so on comes in, because they would give us, in terms of number quotation of the members of, list of members, in terms of growth and so on. Some societies have over 20,000 members, close to 40,000 members. But might I say 700,000, there would be an overlapping. Remember, this changes on a daily basis. People resign from credit unions, people join credit unions. We've either, and on average, most of those members may be members of 2 credit unions.
Okay.
Or, even 3 credit unions. Mm-hmm. Yes, of course, and that is also included, includes junior members.
I suspect your membership is around 300,000. I'm in business.
No, it
We
would be
calculate
more.
that.
It would be more, not 300,000, but There is overlapping, closer to the 500.
We're getting closer to my figure.
Yeah, okay.
All right, thank you. I know Member Manning had a question, and then Member Mr. Devesh Maraj will follow up after.
Thank you, Madam Chair. In terms of supervision, is there any supervision in terms of how the assets of these institutions are invested? What are they invested in, and what are the limitations on those investments?
Well, first of all, I think it would add, okay, let me just clarify something when you posed your question to Mrs. Francis. In terms of us liaising with the central bank as well as financial institution, Trinidad financial intelligence institution, we have to take into consideration. You asked her and she diplomatically answered according to what they have been responsible for. But we have to keep in mind that cooperatives are democratic organizations. So it's not just a question of us stepping in or central bank stepping in and putting the particular laws and so on in place. We have examined a number of areas where, of course, business operations have been challenged, and we try to put the policies and so on and still sticking within the Cooperative Societies
My
Act.
question is, you're supervising the assets and the investments.
Yes.
So there must be a standard that you're using.
There is a standard we use, and according to the Act as well, there is a procedure for investment. It has to be voted upon. At maximum liability and so on has to be voted upon at a general meeting.
Right.
So,
so does that give them free will to invest in anything that they agree upon? Or what limits are there on what types of investments?
Of course. The investment approvals, of course, have to come through the Commissioner's office. I have to sign off on the approvals.
Right.
But
and that's
you have
what I'm
to
asking.
take into consideration their maximum liability, what is being, is it a sound investment, and so on. So we have internally we have an investment officer. He does the reviews and so on to see if those investments are strong.
So are they investing in the stock market, investing in private equity?
Trusts and so on.
So what are the limits of that? What can they not invest in?
What can they not invest
Yes.
in?
What are the limits of the investments of the credit union system?
They can invest in anything.
That they agree upon.
That they agree upon once it's shared and once it gets the Commissioner's approval.
Okay, what would the Commissioner not approve? I want to know what the standard is.
If it is not sound, when we do our reviews, especially with foreign companies and so on, we could turn it down. Or we'd say, if it is not sound, it's too risky for the society based on their financial history. It's too risky for them to put those type of funds out there. And most of the investments sometimes are in US. So
they're investing regionally.
Say it's exposing the members' funds.
So they're investing regionally and internationally.
Yes. Grace Kennedy and so on.
Okay. Thank you.
You're welcome.
Thank you for that, Ms. McMillan. And I don't want it to appear as if we're putting you under pressure, any duress, but I want to pose a question following from what you just said, because I'm looking at your submission, and the question was posed: how does the Commissioner assess whether society's investments pose systemic or member risks? It's on page 6 of your submission. And you, in your response, you appropriately quoted Section 45 of the 1971 Act, and a society may invest or deposit, etc., etc. And in your explanatory note, you say to the committee that in the case where the proposed investment falls under subsection D, and subsection D is that a society may invest or deposit its fund in any other manner permitted by the Commissioner, you say that if the proposal falls under subsection D, you would then request a comprehensive package of documents from the society for assessment, and the documents are evaluated by the investment officer. So I'm coming back now to your $20 billion sector. Member Manning's question about size of investment and essentially my words, not his, the due diligence. The investment officer, is it that you have one investment officer to deal with all of these societies of varying sizes and ranges and varying demands?
Yes, one investment officer.
And is that one investment officer appropriately supported? Because, you know, if I were to wear a different hat, if I were coming to you with a proposal to make an investment in some foreign equity or something like that, that requires a level of skill and knowledge and diligence to be done. So I'm thinking about that one investment officer that you have and that individual's capacity to actually spend the time and effort required to make those decisions. So it's really about the well-being of that one investment officer that you have.
Well, should I say it makes a full circle because it's in terms of staffing. Now, it's an investment unit, right, which would have been headed by an investment analyst, certified investment analyst. But just last year, his contract came to an end, and technically we still have a vacancy. So his one assistant, which is the investment officer, he has been performing the duties of reviewing the investments and approval of the maximum liabilities and so on. So it's one person in the unit, but I think the unit, Mr. Moore, is equipped for 4 persons, inclusive of a clerk.
All right.
A clerk to help with the
paperwork, yes, the administrative side of things. Mm-hmm. Could you share with us how many officers are actively employed in the cooperatives division? Because we know in your submission you spoke about vacancies and interviews, etc. How many?
We have an average of 42 officers.
42 officers. Okay. All right. Okay. Okay. Thank you very much, Member Minister Mara.
Just coming back to Mrs. Francis-Pantor. I suspected you answered the question, but just to be certain, in your view, there is a need for an updated and fit-for-purpose legislation, in your view?
Absolutely, Member.
And arising out of Mrs. Macmillan's response, from the central bank's point of view, after hearing what she said, do you think there is sufficiency there in terms of that investment analysis from one officer within the credit union, the cooperative society, sorry?
Well, I would say that in terms of areas of gaps identified with respect to the legislation itself, when it comes to investments or the Act lacks prudential limits or direction in terms of what instruments you could invest in, or even in terms of large exposure limits. So the Act is limited, right? And in terms of oversight, you would have a system or a process instituted within your organization to facilitate approval of those investments, right? So, for example, if from a central banking
Which is your view.
Right. From a central banking standpoint, that's why you will have things like risk-based capital. So unless you're approving each investment, which we do not do, you will have the limits set out in your Act, or you would have appropriate risk-based capital that you have to set aside depending on the riskiness of the investment that you have, right?
Like a statutory deposit?
Along those lines? Well, it's not a statutory deposit. It's capital that you must hold for your investments, right? So, for example, we have the banking legislation, and I don't want us to think of credit unions as bank, but there are certain limits that guide you and protect the members of the institutions, right? So the shareholders are the depositors. And those limits are put in place for that. So you still have to consider asset liability management, and therefore you don't want a credit union investing everything in real estate, for example, when you have short-term liabilities on your books in the form of deposits. And so you have to match, there are lots of things that you have to take into consideration, and that's why you recommend prudential limits for things like large exposures, for investments, or you have things like risk-based capital, all of which are missing from the current legislation.
So I'm gathering from you, you're not very comfortable with what you just heard. Without saying so much, but I'm getting that from you. Matter of fact, I saw some consternation on your face when you heard what you heard. Yeah.
I thought I was.
You thought you were masking it. You were masking it so well. But again, just to be clear, that I have interpreted and digested what was said both by Ms. Macmillan and by Mrs. Francis-Pantor. There does not now currently exist in the cooperative society and embodied in this investment unit in the cooperative society that kind of approach requiring risk-based capital, etc., to cover some of the investments. Am I to interpret that that is the current situation?
We have done reviews and looked at information in terms of the risk-based assessment, but then again, we still fall short in a number of areas. And I'll ask Mr. Moore to interject, if possible, please, but it's limited where we are concerned, very limited.
Yes, through the chair, we accept that the Act is woefully inadequate in terms of that aspect of regulation. However, notwithstanding that, if you look at the response that we gave, the majority of the investments that credit unions engage in fall under A to C. So that in the normal course of things, the number of investments that actually come to the commissioner are a small portion of the portfolio, because they don't have to come to us.
So while they might be small, as in Section D,
yes,
they might be significant, yes, in terms of the size. So I would prefer if we not use the word small, because it's shareholders' money, so it's not small. It might be a limited number of, precisely, but they're not small. So I prefer if we don't use that, because if they come to you and they fall in category D, it is of a significant amount.
What has happened over the years, however, because the Commissioner's office has been more stringent in regulating this particular aspect of investments, we find that the credit unions have fallen in line with this particular section of the Act, so that they do come to us with investments. Some of them are very significant, yes, absolutely. And in those cases, we have peruse them to the best of our ability. As you know, we are limited in terms of the capacity of the division. Where there is need, we have reached out in the past to the central bank to assist us in the assessment of the more complex ones. But by and large, this area is, I think the credit unions have policed themselves to a certain degree, and they recognize that the Commissioner's office has a very keen eye on those other investments, because we actually go through the annual reports to ensure that there are no investments that were not approved by the Commissioner, and we would write to them if we observe that they are drifting from the Act. So yes, the Act is very weak, but we have put some measures in place to ensure that there's a level of compliance. But we definitely would appreciate the model that we have is a compliance-based model, the 1971 legislation.
I'll ask you nicely, and I hope you'll comply. Yes,
okay. Right. But we want to move to that risk-based assessment, and we recognize that that is a major weakness in the legislation.
All right. We have a number of, you've whetted the appetite, clearly whetted the appetite of the members. We have a number of members who've signaled their interest in posing questions. So we have, in order, Minister Sicharan, followed by Minister Sobers, followed by Senator Dan Paul, and followed by MP Manning, please.
Good morning, everyone. I'd like to just build upon the point that was made in terms of assets and veer towards shareholder insurance. Given that the central bank has acknowledged that credit union shares and deposits are not subject to mandatory deposit insurance, and that membership in the credit union deposit insurance fund remains voluntary, could you tell us what percentage of credit union members, if you know, are protected by the credit union deposit insurance fund?
I'll ask my colleague to respond. Nairi.
Thank you for the question. But at this time, we are not able to say because the current credit union deposit insurance fund is a cooperative. The Deposit Insurance Corporation, which is the current fund that is geared towards the banking industry, it does not currently cover credit unions. We have made proposals both in 2014 and more recently as part of the implementation team to include a new fund that will be managed by the Deposit Insurance Corporation to cover members' shares and deposits. In terms of current coverage by the cooperative QDIF, I'm not able to say. We don't have those figures. I'm not sure if the commissioner may be more aware of it.
We also have limitations there because TTQDIF, Trinidad and Tobago Deposit Insurance Fund, they're secondary body under the cooperative division. So they are a registered cooperative with us. And not all credit unions in the sector are members.
So would it be fair to say that the majority of credit union members are not protected by insurance?
They have their agreements with a number of the generalized insurance companies, investments insurance and so on, but under TT, we can only answer where TTQDIF is concerned.
So another question is, thank you, what risks does this pose to members in the event that of a credit union, the failure of a credit union, and does the central bank consider the current deposit protection arrangements adequate to safeguard public confidence in the financial system?
Well, I think it's posed, it's a tag team thing, so it's posed. Ms. McMillan is part of the response comes from the cooperatives and then the central bank, because really, as it stands now, this is your wheelhouse. You have responsibility for the cooperatives. So,
well, we look at a number of credit unions who would have investments, insurances, and so on, with the private sector insurance companies through insurance industries, right? But to say the level of risk exposure, we can't really see. They do have deposits and so on, and they have their terms and time frames also, as the case may be, but we can only answer for the TTQDIF and the amounts that are exposed out there.
And what is the level of that exposure? I think that is the key part of Minister Sitcharan's question. What is the level of that exposure?
Of that exposure?
Yes.
I would say an average of 40%, but there's sound investment because they have their insurance advisors and so on to give them the proper advice in terms of investment.
May I suggest we'd like to give you the opportunity so that we could digest the information properly and not become, sort of unsure of the responses. So may I suggest that you all provide a written submission on this particular point so that we have it for the record? In response to Minister Sitcharan's question.
That can be done, yes.
Thank you very much. And Madam Chair, to the central bank, just the follow-up point, does the central bank consider the current deposit protection arrangements adequate to safeguard public confidence?
Well, The current deposit insurance arrangements cover the banking sector only, right? It does not cover credit unions. And that's why my colleague mentioned that part of the reform initiative was establishing a separate deposit insurance fund for credit unions under the DIC Corporation. With respect to the current levels of DIC recently increased its coverage to 200,000 per person, per account or depositor, and their current ratios are in keeping with international standards and norms in terms of deposit insurance coverage. Right?
But that is only for the banking sector.
For the banking sector.
Mr. Sobers, I think you were next in the round.
Thank you, Madam Chair. I would like to go back to the ability for the Commissioner to assess the society's investment. And this is more for Mr. Moe. Mr. Moe, you would agree with me that the task of the evaluation under D in any other manner permitted by the Commissioner that is being given to the investment officer is a very Herculean task. Can you indicate to this committee what are the qualifications essentially for this investment officer?
I won't have that information, but I guess we can provide it to the committee upon request. Yeah.
The positions are contract positions, so we can't give any information, as he said, pertaining to HR and so on. But in his evaluations, if he is doing his evaluations, we have these standards, which is either pearls or camels, which he would use to make the evaluation. So.
No, I think Minister's question was about the qualifications of the individual who currently occupies the office of investment officer.
Yes.
Yes. What is that person's qualifications? Generally, I mean, general. We don't need to see the papers. We don't need to see the piece of paper. But what is the requirement? Sorry?
A degree in either economics or accounting.
And that is the person who's the investment officer.
Yes.
Okay. All right.
The analyst, however, may have, of course, MSc in investments, but that post is presently vacant.
The analyst, but based upon the response here, the documents are evaluated by the investment officer who identifies any gaps in the society's submissions. These are often then brought to the attention of the society's board and management with a view of rectification. If the Commissioner is of the view that the investment poses a membership risk, it will not be approved, in which case the society will be informed in writing outlining the reasons for denial. I know that previously you mentioned that the investment officer is part of a unit.
Yes.
So the aide to the investment officer, who's the person making these decisions, is this analyst that has essentially more qualifications than the investment officer himself?
No. The post of investment analyst who would head the unit is presently vacant. We have the investment officer who is carrying out the functions of the unit. So he's technically doing his work as well as the senior officer, which is supposed to be the analyst. So the post is vacant.
So then essentially the person doing the assessment should be the investment analyst.
Yes, with the assistant of the officer.
It wasn't clear based upon the response here.
Thank you for the question, Minister Sobers, because it brought another layer of clarity, if I can use that term. It brought another layer of clarity to the conversation. But if I may, I know that two colleagues are in the round, Senator Danpole and MP Manning, but on the issue of the resourcing and the capacity in the unit, I think in your submission you mentioned that interviews have been held and And could you just update us on what posts are going to be filled? Because I think, if I may not speak for Minister Sobers, but I am getting from him that there is a concern that we don't have someone appropriately equipped to be making some of these decisions. So tomorrow, in somebody's desk right now, it's Friday, and Monday morning there might be some investment decision that comes to your office, and we want to get some kind of comfort. So in terms of the submission where you said that there have been posts have been advertised, I forget the specific language you all said that posts were advertised, particularly for M&E, but is it only for M&E, or is there going to be, because what you have been sharing suggests that we have a legislative challenge, but we also have a human resource challenge. That's what I'm getting from your contributions. So the specifics was on M&E, but is it that you're going to recruit persons for other posts? Because this seems to be, based on Minister Sobers' question, this seems to be a challenge as well.
If I may respond, it was only particularly M&E that we're referring to in terms of the advertisement. In preparing for this meeting this morning, it would have been brought to my attention that there are a lot of staffing requirements for the division. So I would have asked the Commissioner to provide me with that information so that the ministry can take the necessary steps to create appropriate positions and have them filled.
Question, please. What has been the challenge with filling those posts? What exactly is the complication?
Member, I have to have that discussion because the Corporate Development Division was not under the Ministry of Labor. It has now been realigned to the Ministry of Labor.
It was, and then it wasn't. So I think let's be clear. It was, and then it wasn't, and now it is. Yes.
From 2020, October 2020, it was under another ministry. It's now been realigned to our ministry once again. So we have to have that discussion in terms of what are the needs of the division in terms of staffing.
But you know, while I appreciate that intervention, PS, and it is useful, investment decisions would have been made regardless of where the Commissioner's office was domiciled. So while I appreciate your response, investment decisions have been going on. So the concern of this committee, as expressed by Minister Sobers, still remains. So whether it was in Ministry X, Y, or Z, investment decisions would have been made.
Just to share, when it was under the ministry, there wasn't an investment unit.
Yes.
I hear you, but you're missing the point, and
Yes,
you're seeing the look on Minister Sobers' face, because you have just said something that is extremely concerning to me, and I suspect to several of the other members of this committee. So you have just said something that is extremely worrying. All right, so again, we would ask for that submission in writing, please, because you've just said something, so I wouldn't want us to continue down that road before we say things that really ought not to be in the public space, yeah? MP Manning, I think you had a question, or Senator Dan Paul, yes.
Thank you, Madam Chair. To the Commissioner, thank you. Against the backdrop of a $20 billion industry and the fact that we all lived through the collapse of the Hindu Credit Union, it is very worrying to know, at least to be told, that there are no monitoring and evaluation systems at the Commissioner's office. How do you track, for instance, how do you track compliance trends? How do you track emerging risks? How do you, what are your early warning signals, for instance? How do you do this without a monitoring and evaluation component?
We use the accounts, the submission of the financial statements, as well as we advise societies to submit their annual returns and so on, whereby we have the post of accountant 3 that works. We also have an audit unit that works to evaluate those societies. So coming out of their reports, and this is the pulling of the figures when they do the particular calculations with the equations and so on, they will be able to say, you know, if a society is heading down a road, losing funds, how do they use their undivided earnings? So we would see a society, there would be trends. So it's not just a question of saying, well, you have to make a profit every year or so on, and you have to increase your dividends. But evaluations are made based on income and expenditure, the balance sheets, and so on, and the annual returns in particular, to see how income comes in. It would affect the dividends when they get the returns from the foreign investments and so on, members paying their loans because loan payments comes back, and it is the working capital of the organization to churn the entire system. But all we have to do is work with the financial statements that are submitted. And of course, the red flags will come along with societies that are 2 and 3 years outstanding. And we would write letters. Why have you not submitted? What is going on? We also provide them with a list of auditors that we insist that they have to use from the commissioners
with all
approved
due respect,
list.
but by that time it could be too late. If you're not evaluating the investments to begin with, you make an investment, and you know maybe it's going well first 2 years, but then you see things turn sideways. By then it's already too late because you didn't evaluate the investment to begin with. You're just evaluating what happened after the investment was made. So that's why the central question was, who is evaluating the actual investments?
Even if they are doing and making an investment, let's say it's 1 year or 2 year or even a 5 year period, to get that approval, and if they see that it is not, it may not have been lucrative, and the society, and based on the accounts that we would review as well, we will be able to say, yes, you can invest 2 million with this organization again or so. So if it's not viable, you invested a certain amount for a certain percentage, 3 to 5 years or so as the case may be, and it didn't come into fruition, we would, of course, advise them that it would not be feasible at a particular point in time.
Commissioner, with all due respect, I don't think you provided me much comfort there.
Yes.
The Hindu Credit Union cost the taxpayers of this money, of this country, significant millions. And I know Mrs. Francis-Pantor is listening very carefully.
Yes.
And just on that, Mrs. Francis-Pantor, based on what you submitted to us, you said that the central bank noted continued pushback from sector stakeholders as a potential challenge to reform. What's the nature of this resistance?
Through the chair, I'll ask my colleague to take that question. She has been more informed, involved in the nitty-gritty aspects of the discussion. Thanks.
Thank you, Inspector. My involvement in the sector consultations over the years and development of the bill, and more recently as part of the Cabinet-appointed Implementation Committee, where we were a member working towards the development of policy proposals for the DIC as well as for the Independent Cooperative Authority. There has always been friction with certain factors of the sector, and as much as over the years we have compromised in the sense that when we were doing the 2014...
May I disturb you a second? Friction, would you like to explain?
But I'll give an example. When we were doing the 2014 bill that the central bank was supposed to become the regulator, one of the most contentious issues was governance, the governance provisions, because that has been one of the areas that we think posed a big risk to the sector. We saw a lot of entrenchment at the board level. There was no fit and proper criteria. And as much as we understand that it's a democratic process and it's member-driven, at the end of the day, the credit union is responsible for members' funds, handling it properly, and they have a fiduciary responsibility to, make proper decisions. So you want to ensure that persons who are making those decisions, they have not necessarily financial acumen to the level that you may see in another financial entity, but they have understanding of financial statements, etc. So there was pushback on things like that when it came to governance, requiring some minimum requirements that would see board members having to do probably some training, etc. So on our side, it was given to some of the sector's requirements and just put some basic requirements. And on the sector's side, it was, this is a democratic society. Anybody could walk off the street and put themselves up to become a director on a board. So therefore, this is undemocratic. That is one example of what I would call friction that I would say it has not been resolved, because even as, more recently, working with the sector on the implementation team, some of those issues have still remained, requiring the level of capital. That has been another issue. We tend to go by international standards. We tend to do jurisdictional research to see what other jurisdictions, both in the region and internationally, as well as what bodies like WACU, which is the World Credit Union Organization, the minimum standards that they set, but you would have pushback, even though you have all of the evidence to show this is possibly the minimum that should be set in Trinidad also. So that has been the experience, and that has that's the reason this was put into the response, because I think along the way, over all of the years, we have not gotten that commitment from the sector that it's important to move the regulatory framework forward.
Minister Sobers, I know you had a burning question. I don't know if it's still burning or if it...
No, Madam Chair, I was going to make a comment essentially and follows from Senator Dan Paul's monitoring and evaluation question, and I suspect maybe even MP Manning might build upon that. Essentially, what I'm getting is that as it pertains to monitoring and evaluation, checking of the potential of the investments being made by or proposed by the credit unions, all of the systems that should be in place by the Commissioner's office, not the Commissioner, the Commissioner's office, essentially it appears to either be non-existent, tardy or late, and we are dealing with a situation where you're trying to rein the horse in after the horse done bolt, disable, and make 2 or 3 laps around the corral. And I mean, yes, legislatively, I agree. I think we all agree that something needs to be done. But internally, there should be some structural changes, and immediately.
Thank you. I think Minister Sicharan wanted to pose a question.
Thank you very much. And just to build upon Member Sean Sober's point, what we are trying to do here is we're trying to get some level of protection for the vulnerable and underbanked populations. And I'll just like to start off by saying from the documents provided that credit unions account for approximately 4.3% of the total financial system's assets. And out of that, that roughly works out to be $18.5 billion. And referring to the 2017 IMF Caribbean Regional Technical Assistance Center's Technical Assistance Report titled Strengthening the Regulatory Framework for Supervision of the Credit Union Sector in Trinidad and Tobago, it was said that the potential systemic risks are not considered significant. However, sectoral risks may have significant implications for financial inclusion and disruption of services to the sector's over 600,000 members. And that given the size of the sector, it was unlikely that the failure of one or more large or medium credit unions will significantly impact the financial stability of Trinidad and Tobago. But what the question is does the bank, the central bank, or consider that disruptions affecting over 600,000 credit union members could nonetheless have broader social or economic consequences, particularly for the vulnerable and underbanked populations in Trinidad and Tobago?
Member, the short answer for that is yes. While it will not have, we will not see a systemic collapse, in our view, from a failure of one or more credit unions, we do see that disruption to the public. There will be some persons affected and there will be a disruption there. There are some mitigating factors that persons are members of more than one credit union. And some of the persons who are members of credit union are also banked, right? So there are mitigating factors. And the reason why we said that we don't see some of the funds, even if institutions or persons pull their funds from a credit union, it may end up back in the banking system, right? So, but from a disruption point of view, some persons may lose some funds. There will be disruption or displacement of some persons when the credit union fails. So we recognize that from a social aspect, from a financial inclusion aspect, there will be disruption, right? And therefore, there is a need. There's a need to really strengthen the oversight of the sector. So we recognize that completely. In addition to which, a strong credit union sector will augur well for financial inclusion from the other side, in that perhaps the sector will gain inclusion, gain ability to the payment system, for example, and therefore able to offer more products and services to their clients, to their customers, and which will drive competition in the financial sector as a whole, in terms of competition with the banking sector. So we see enhanced regulation for the sector as a positive contribution to the financial stability and financial growth of the sector as a whole, and for financial inclusion.
So, thank you very much. Thank you very much. And you said that there's a need to strengthen this particular sector. In your view, is this a risky sector to be in? And secondly, other than legislative amendments that at the parliamentary level that we can make, what else can be done to improve this or strengthen this sector?
I'll answer the second part of the question first. The legislation is key to helping improve and strengthen oversight of the sector. And then with the legislation, regardless of if the Commissioner Office needs to be adequately resourced to perform their functions. I'm hearing the constraints that they are working under, and I mean, it's untenable. They cannot do a proper job with the current resources, right? So I think there's a need to build resources in terms of numbers, in terms of institutional capacity, in terms of training and development, and ensuring that there are the right people there in the organization to do the job, right? But the legislation is also key, because then they will be hamstrung. If you have the persons now, they will be hamstrung if the legislation doesn't support them in terms of how they levy fines, if the fines are not adequate, if they don't have the proper ability to stop or rein in a credit union that is not doing what it should be doing, right? And in terms of the monitoring side, there's need to have more frequent information. You cannot work with audited financial institutions, audited financial statements, which come a year after and which are late because some of them don't even file on time, right? So you cannot work with that and be an effective regulator because you're not getting the information in a timely fashion for you to act in a timely manner to prevent any kind of issue. So they need information on at least a quarterly basis. They need key information to monitor the institution on provisioning, on loan losses, on capital adequacy. So I think it's a situation where, yes, you can build some capacity. Now you could start with institutional strengthening, but you also need the legislative framework to help.
Thank you very much. And at this particular point in time, in your estimation, is this a high-risk sector to be in?
I wouldn't say it's a high-risk sector, no. But there is risk, of course, to the depositor or shareholder.
Minister, following on from that?
Ms. Francis-Pantor, are you saying that the credit union sector does not provide a systemic risk, does not pose a systemic risk to the financial system?
From our perspective right now and based on international feedback and support of this, I don't see it posing a systemic risk at present.
So it's not too big to fail?
No, I would not say it's not too big to fail. Not the entire sector. I mean, you wouldn't have the entire sector failing, right? But you will have an institution also failing, and I don't see that posing a systemic risk at present.
Mr. Devish Maharaj, I'll come back to that point, Mrs. Francis-Pantor, but I want to give Minister Devish Maharaj the opportunity to pose his question.
No, I think the answer to this question may have been in bits and pieces, but the central bank assessment in your answer that the current regulatory framework for credit unions under the current act is not sufficient to prevent a repeat of a failure like a credit union, I won't call the name, particularly in light of the absence of robust prudential standards and corporate governance requirements, right? I'm taking that statement, but I'm addressing the credit union, the cooperative society, cooperative division. Given that your division has the responsibility for administering and enforcing this act, can you advise what specific regulatory, supervisory, or legislative reforms you have identified or proposed to address these deficiencies? Can you? And I have a follow-up question, but just quickly, if what you have identified.
There have been a number of policies and circulars we've put in place in an attempt to try to encapsulate. Well, when we review the act, we see that it may not be covered in the act. So we put policies and we circulate them among the movement. But I will pass the question on to our legal officer, Ms. Amanda Wallace, to give an update on.
Thank you for the question. In our written submissions, we did attach some immediate regulatory amendments where under Section 81, the minister is empowered to make amendments to the regulation. The gaps that we have identified, we have tried to address them there, but...
Can you tell us, because we're on air right now?
Okay, so some of the recommendations that we would have made would have been to bolster the submission of financial statements. For example, quarterly financial statements in order to give us a better view of the society's financial status. That is just one area of amendment. There have been amendments to several other areas as well. in terms of the Commissioner's powers to cancel the registration of a society, we seek to bolster that a little bit more to give the Commissioner some more teeth in that respect as well.
So just those two areas?
No, we have, we have also made changes to maximum liability provisions, for example, standards of business and financial practices, for example. There have been several areas, but those are the immediate gaps that we have identified. But to effect any change, we have to make changes to the parent legislation.
Yeah, thank you. I would forward the second part of the question.
Sure. May I ask the ministry to provide us with a written submission on those suggested? I mean, I know it came in as part of your submission, but if now, in respect of the specific question posed by Minister Devesh Maharaj, if you can give us a written submission. I know MP Manning, I still have some questions I want to pose, but MP Manning has some questions. Member Manning has some questions.
Thank you. Will this sector be affected by the government's proposed tax on assets to financial institutions in Trinidad and Tobago? And if not directly, will the various funds held by these credit unions be affected by the state's proposed tax on assets?
I'll pass that question to Mr. Moore.
Through the Chair, I'm not aware of what are the proposals of the government regarding taxation of the assets.
You didn't read the budget document, sir? Well, the state had proposed a tax on assets of financial institutions in Trinidad and Tobago across the board. I was asking if the credit unions would be included in that, and I've gotten from many fund managers, because the banking sector comprises such a huge part of many local domestic portfolios, that it would have a negative effect on these various funds, much like we've seen recently at the UTC, where they had to rescind their protections for many of their depositors. But I'm saying that if you're not familiar with it, then I suppose that you would not be able to answer the question. Is there anyone else who would be familiar?
But I would want to ask if we can get a written submission, because I think it's an important aspect of the division's work in terms of the oversight that you currently provide. So I would wish to ask if you can
Yes, we will prepare a document.
Identify the budget recommendation to which Member Manning referred and provide us with your sense. It doesn't, it's not anything that I think we will hold you to, but provide you with a sense of whether or not this might have an impact on you, and perhaps also articulate what you think could be the impact on your members. I think it's a worthwhile question, yeah?
We wouldn't want to have a tax on assets that cripples the entire industry.
Absolutely, but I think it's something that, perhaps is worthy of a conversation. If I may, I know we need to wrap up soon because we need to be in other places.
Rhetoric that is not really needed. Nothing is going to cripple from anything from tax. I think Mr. Mann has taken certain liberties with this.
I wanted to go back to the question, well, a statement made by Mrs. Francis-Pantor. And in the context of the submission from the central bank, and it's a question that has been posed by members around the table, there is no systemic risk at this time, I think were your words, but I would want to ask you if you could revisit that comment in the context of members who have deposits in the credit union, 600,000 plus, however we determine. So while there is no systemic risk and we're not going to witness the kind of collapse, your statement that it's not too big to fail, or it's too big to fail, I wasn't too sure where we got in terms of that statement. But I want us to remember at the heart of our conversation are persons' savings, sometimes their life savings. And with that in mind, if we do not address some of the gaps that we've identified this morning, whether or not this is not a significant risk. So we move away from the 20 billion asset. We move away from that conversation because You could absorb a $2,000 fine, a $10,000 fine. You might even be able to absorb a $100,000 fine. But when we look at these are not inanimate objects. These are savings of individuals in Trinidad and Tobago. Yeah. So I would want to ask you to revisit your comment, please, because I'm a little uneasy.
Well, I will clarify the comment. In 2017, the Central Bank commissioned assistance from the Caribbean arm of the IMF, CARTAC, to look at the interconnectedness, the risk to financial stability from the credit union sector. And coming out of that, the view was, given the sector's contribution to the total financial sector assets or GDP, that there is unlikely that any single failure or series of failures from a credit union will dramatically impact the financial stability of Trinidad and Tobago. Notwithstanding this, it was noted that there is a serious threat to the stability of the credit union sector, which can have implications for financial inclusion and disruption of services. So persons could lose funds, and so that was noted because the industry has over 500,000 members. So it is not a small amount of persons who could be affected. So we are aware of that. And it's in light of that, because it's a significant amount of the country's population. And we recognize, okay, this can have an impact on the members, and we have been advocating to strengthen the regulatory oversight of the sector. So it's not that we are taking light or making light of the contribution of the credit union sector to the financial sector as a whole, but we were approaching it from a different aspect because we needed to understand the systemic implications and the knock-on impacts and the interconnectedness of the credit union sector to the rest of the financial system. Okay.
Thank you so much for that. I'm breathing a little easier now. Thank you so much for that clarification. As I said, I know we need to wrap up, but I must ask a question which the response may be provided in writing in the interest of time, but goes back to the M&E question that was posed to the Commissioner some minutes ago. I am distilling from the Central Bank's report, the Central Bank submission, and also from the Ministry of Labour's submission. So this is how I'm going to frame my question, as it were. So the Central Bank submission talks about some of the critical microprudential measures that may be considered in the short to medium time frame. And one of the considerations, one of the measures, is the implementation of an adequate reporting regime for credit unions to provide key financial data at specified frequencies, and should include inter alia asset quality, including the value of non-performing loans and the ratio of non-performing loans to total loans and to total assets. And then I want to marry that. So that's the first part of the question, because when the Commissioner made her submission, responded to a question a little while ago, she said they look at things like, profit and loss, and if a credit union makes successive losses, they don't necessarily raise that as a flag. So I want to ask now, and maybe I have misunderstood, but now with this inside of here, the whole question of non-performing loans, how do you factor that into your evaluation, your M&E, as it were, of credit unions? So even though that you're now seeking to recruit to fill persons in those roles, there must be some M&E going on by someone. All right, so how do you deal with the issue of non-performing loans? And I also wanted to ask, and again I'm repeating that it's perhaps possible in the interest of time for you to submit these as written responses, which might actually be a better thing. In the Ministry's submission, in the Ministry submission, Ministry of Labour's submission, you identified a number of complaints submitted by members of the public concerning operations of the credit union. That's between the period 2023 to 2025, approximately 68 matters, the lion's share of which was about the non-refund of shares, 61%. So my question is, what I imagine were your investigations. What did your investigations reveal about the reasons for the non-refund affairs? 61% of the complaints that you received, not a small amount, whether we say it's 300,000 members, 500 or 700, not a small amount, it's a significant amount. So if perhaps you can send us that information in a written submission, but also reconciling the conversation around non-performing loans based on the central bank's recommendation that perhaps some critical, words are important, critical microprudential measures that may be considered would include the ratio of non-performing loans to loans as part of the asset conversation. Yep. So if we can have that in writing. Colleagues, members of the committee, the central bank's team, the Ministry of Labour's team, I wish to sincerely thank you for coming in this morning and sharing your insights, providing clarification to us on the many questions that we've posed. It certainly has been quite elucidating for me and I think for other members of the committee. And I would now wish to invite the PS from the Ministry of Labour to provide some brief closing remarks, followed by Mrs. Francis-Pantor from the Central Bank to provide some closing remarks. Over to you, PS.
Thank you, Chair. Just to say that we appreciate being part of the discussions this morning, and arising out of the discussions, we recognize that the Ministry has a lot to do. Firstly, in terms of reforming the legislation in light of all that has happened in the sector. We also recognize the need for the Cooperative Development Division to be strengthened to better support societies. Additionally, there is a need for mechanisms for data-driven decision-making and performance monitoring to ensure that the contributions of this sector are accurately measured and supported. Thank you.
Thank you.
Mrs. Francis-Pantor.
Madam Chair and members, I too wish to thank the committee for this very important inquiry into the regulation and supervision of credit unions. I think it is long in coming. We do need to strengthen the sector in terms of the regulatory framework, that to have proper guardrails for the members and depositors of the institution. And I'm happy to be a part of this inquiry. And the Central Bank continues to stand ready to assist in whatever way possible to strengthen the sector, because it is an important sector, and it will redound to the benefit of the financial stability of the entire country as a whole. Thank you.
Thank you so much. I also wish to again thank the respective teams for coming in and providing the support and the clarity this morning. I also wish to thank the members of the committee for providing their support to me as we navigated today's proceeding. I think it was quite an insightful and robust conversation. I wish to thank the viewing and listening audience, citizens of Trinidad and Tobago, perhaps yourselves, members of credit unions. I hope that you found this inquiry insightful and we were able to provide you with some information as you navigate your respective credit union spaces. And again, thank you so much for being with us today. And I now wish to bring this inquiry to a formal close, and the meeting is now adjourned. Thank you again.